Hello friends, welcome to the Maybe Investor educational video series. How are you doing? I hope you're having great time trading in the markets. In the previous video, we talked about short-term positional trading method, if you remember, right? How to trade in the short term on positional basis. And we talked about a very specific method using the MACD and stochastic method. Okay. So very obvious and most important question now people should have in their minds is, once we have entered into this short-term trade, when to book profit, right? When exactly to book the profit when you are profitable? Absolutely right question to ask. We all are trading for profits, and it is very important to have a plan based on which we develop habit to exit from a trade at the right time with the right profits. So the question now is, how do we know it's time to book profit? Okay, so well, let's try to define new standard ways through which one can exit a trade in profitable situation. Okay, so these are the 4 ways which I think are good ways to talk about. Okay, obviously you have to follow one of the ways, not necessarily all the ways, all the mechanisms, right? But I definitely want to give different options to people with different proficiency levels, because everybody may not be able to execute all the methods, right? So these are the 4 ways. I would prefer the first one the most, right? Finding negative divergence using the RSI as the primary indicator, and you can also use other oscillators like RSI as well. So this is my preferred method. If I am in a short-term positional trade, I would prefer to use negative divergence as a mechanism to identify the right time to come out of a profitable trade. Okay. Second best method I would say would be to use to identify significant resistance levels in the chart, right? And typically I use weekly chart to identify the significant resistance levels in the chart, okay, and which we will be using to exit out of a profitable trades. Okay. Third method is more of a thumb rule, okay, because you're not able to identify negative divergence. Also, you're not able to find resistance levels. You're not very confident on your observations, or you're taking more time. Maybe after 6 months or 8 months, you'll be able to do so. But till then, what can you use? So till then, you can use this thumb rule, right? Just use the RSI indicator, and whenever it is coming down and crosses below 70, so stock was rising, it is giving you profit, you're sitting on a profit now, stock RSI has gone above 70 level already, and now it is starting to come down, right? And in this come down process, when it has crossed below 70 is when we are saying that you can use as a thumb rule, as a signal to come out of your profitable trade and still capture decent profit. Okay, so that can be one thumb rule. Next one, I'm calling it a dumb rule, because there's no rule, right? So it's very simple. Whenever you see 8 to 10% profit, you come out. This is more like very simplistic way to do things. Okay, and preferably you should follow the other 2-3 methods which are mentioned here above this. But if you're not able to follow any of it, then you can follow this dumb rule, that whenever you get a profit of 8 to 10%, you come out. But then in this dumb rule, you are always restricted in your profit. You will never be able to see bigger profit more than this, right? So if you practice and make yourself more proficient in executing other rules, I would prefer you to practice the first and second a lot, right? And if you become good into it, always use one of those two. Okay, so out of these four methods, um, we are going to in this video we are going to concentrate on in more detail in finding the negative divergence, because this is where people have most difficulty, because this is little bit subjective, and there is a lot of observatory skills which you need to develop. So we'll take good amount of examples to understand how to identify the negative divergence using indicators like RSI. Okay, identifying the resistance is another dedicated topic, and many people know this method, but we can discuss in more detail in a separate video, right? For now I can tell you that there are two ways in which you can identify significant resistance levels. So on weekly chart, always draw horizontal support resistance lines, identify where multiple tops or bottoms or combination of tops or bottoms are happening, draw horizontal lines and treat them as resistance, resistance or support levels. So you have to identify this based on the historical chart. Okay, you can also use, this is a very useful thing, you can also use Fibonacci retracement tool. So you can draw Fibonacci retracement levels on weekly chart and use that to understand the next level resistance in the chart, or you can combine these two things together, right? If you need more detailed explanation of how to do this, probably we need another video. Okay, so right now we are going to concentrate on our most preferred way to identify the time to exit, which we'll use it here, is negative divergence. Okay, using the indicators like RSI as a primary one, and you can use other oscillators as well. Okay, so let's take few examples. Let's look at the charts and understand how to identify this demon called negative divergence, which many people face difficulty with. Okay, so let's shift to our charting tool now. All right, so we are on our charting tool. We have seen this already. This is semi broker, right? And so let's start straight away with one example. Okay, let's see which stock to pick. Tata Global can have a good example. Let's open Tata Global chart, right? And remember, when we entered into the short-term positional trade, we always enter based on daily chart, right? So our exit criteria will also be on daily chart. So we will identify negative divergence on the daily chart for this short-term method. Okay, so we are in Tata Global daily chart. I have the price chart, and along with that I have RSI, stochastic, and MACD. We'll use RSI as the primary tool, primary indicator to identify the negative divergence. For confirmations, we will use stochastic and MACD histogram, right? So we don't care about this line, these MACD and signal lines, but we will focus on histogram, which gives us the mechanism for identifying negative or positive divergence. Okay, all right. So what is negative divergence? First of all, negative divergence is the difference in opinion between the price movement and the RSI line or the any other indicator line. Okay, so here in the current area, you see you have to observe how many price peaks has been made, right? So this is one peak made by Tata Global on this day, on 15 January. Then it consolidated and made another peak, even higher peak, right, on 23rd January. Then another higher peak here on 5th of February, right? So we are talking about these three peaks. What you have to observe is how RSI is behaving while these successive peaks are being made, higher peaks are being made by the price. So first peak on 15th January, RSI value was 82. You can see this, 82.59. Now check on the next peak which was made, 23rd January. RSI value is now 76. So it has come down from 82 to 76. Whereas the price has gone higher, right? Third peak here on 5th February. Okay. Again on 5th February, the RSI has become 78. So RSI from 82 to 76 to 68. So constantly you see that price is moving up by seeing the successive peaks, going up peaks we have seen. RSI is making lower peaks from 82 to 76 to 68. This combination, so where price peaks are rising and RSI peaks are lowering, this combination is called negative divergence for RSI, right? So same thing you can observe in stochastic also. So now concentrate on this middle indicator, right? And we will look at percent D1, the slower one. Okay, for negative divergence identification, we'll use the slower line, which is percent D line. Okay, so here also we see first peak stochastic is 95, second peak stochastic is 87, third peak stochastic is even less, 43. So 95 to 87 to 43, whereas the price has increased from 395 to 399 to 408. So price peaks are rising, stochastic is falling. This combination is negative divergence for stochastic, right? If you see this carefully in our other indicator also, we have the same issue. So here in the first area, 15 January, you have to observe the histogram, right? So the shape of the histogram. See, in the first peak, around first peak, the MACD has the highest tower of histogram. You can read the MACD value also, right? And then if you see the next one, MACD tower has come down, correct? If you see the next peak here, again the tower is now negative, actually now it's in the negative zone. So again MACD histogram is also falling while price was rising. So here in Tata Global, you have confirmation from all the three oscillators which we are going to use to identify the divergence, right? Here you have confirmation from all. It's not necessary that all indicators will always be aligned and will be showing you the same message, but if they do, you have to respect it a lot, right? So if you had, let's say now when you would have come out, right? So let's say you have bought somewhere here on 9th January around, let's say you got the entry signal, right? So now after that you saw this first peak 15th January. On 15th January you are sitting on good amount of profit. I think some 10-12% profit it could be. I'll not go into the calculations of that, but you see that RSI has made a peak, price also has made a peak. Not a problem. You don't have any reference to understand on this day that there is a negative divergence. Let it go, move on. Price comes down little bit, no problem. Now it makes a even higher peak in the price on 23rd January. Now you see what is happening with RSI. So now on this day you will be clear, right? Or at least next day when RSI has again started to fall down along with the price, and now you see this peak, the new peak in the price is higher and corresponding RSI is lower than previous one. So now this day, on at least on 24th January, you are clear that there is a negative divergence. Okay, so on this day first negative divergence itself, if you want to come out, you can, because this is already a warning that you should start being careful. This price uptrend is in danger and it can reverse soon, right? There is no guarantee that it will always reverse, but this is a good enough warning for you. It's a leading indication that you should come out of this buy trade which you have. And great thing is that it is telling you to come out at the really top of the chart. Let's say you ignored this negative divergence, first negative divergence. Okay, you can wait for another second negative divergence. So next time it made another higher peak on 5th February, even higher price now. Again you see second negative divergence signal has come on around 5th, or you can say 6th February, right? Second negative divergence, I would definitely say you should not neglect. Okay, if you didn't come out after first negative divergence for whatever your reason, which is still okay, that you still wanted to see if this is still going up. So after first negative divergence you didn't come out, not a huge issue. Second negative divergence, you should definitely come out. So if you had bought Tata Global and you're sitting on 10-12% profit, it is showing that there is its negative divergence which has been confirmed second time. You should definitely come out on 6th February, okay, and book your profit. So this is the best way to maximize your profit. You're not coming out on the lower part of the charts or after a lot of correction or anything like that. You still come out decently, okay, with good amount of profit. And if this continues to go up without any divergence, it's fine, right? So it's not necessary that every time there will be a divergence. If price is going up, okay, if price is going up and RSI and other indicators also are going up only and making new highs along with the price, no problem. Let's take an example. There's a stock called Vaibhav Global. It's been a very nice trend recently. That's why I'm taking this example. Okay. Here, let's say you have bought somewhere here in this zone, right? In this breakout or somewhere here or whichever point. We are not going into the entry point right now. Let's say you have bought around this time, around 10th to 14th January. You see there is a significant peak made on 31st January. So first of all, on 14th January, what was RSI? What is the peak of RSI in this zone? This one, right? 75, around 16th January peak. Now next peak is made in the price. This is on 30th January. Now RSI has risen to 81. So RSI is higher than previous peak. Now 81, earlier peak was around 75. So price went high, RSI also went high. This is nothing to be scared of. People get very skeptical even when they are being in profit, that will this trend continue or not. If RSI is making new high along with price making high, is a good sign. It's a confirmation of your uptrend. You should not be skeptical about it. Although there will be corrections, you should be ready to see through small corrections, okay, if you want bigger profits. It's as simple as that. Every stock gives you correction, even if they are in good uptrend. So on this day, around this date, 30 to 31st January, you should not come out. There is no negative divergence. RSI is nicely making new high along with price. You should be more confident. See through this small correction, you see again new peak is made, right? New peak is made. Around this zone, you can think little bit, is there a negative divergence or not? Because in RSI, the RSI is not now lower than previous one. This first sign of negative divergence, okay? If you waited to see second divergence, then I will come out. There is no need to come out after that, right? It has continued to march ahead. In fact, RSI is right now is on the verge of probably making new high. You don't know. You have to see through one or two more candles and then decide whether negative divergence exists now in the current zone or not. Because as long as it is going up, sorry, as long as it is going up, you can't say that there is already negative divergence or not. It has to stop, pause, start coming down a little bit, one or two red candles, then you see the shape and decide. Okay, so the point here is, if RSI also is making new high along with price making high, should give you more confidence. You should not think of coming out. But if RSI starts to creep in negative divergence, then you should plan to come out. Okay, first one, it's up to you. If you are in decent profit, I would say even in the first one you should come out in first instance of negative divergence. If you want to try one more shot, then at least wait till second negative divergence. If it comes, definitely you should come out. Okay. Okay, so now let's take one more example in case something was not clear. Hopefully this can clear things out. We can look at Polycab, another great stock, very nicely uptrending stock. Okay, here also you can see peaks in the price. This one on 5th December, price was 1091. Then next peak was made on 21st January zone, price is 1133, and 1147 it was. And next one yesterday, 1157, this last candle, right? Okay, so this was 1157. This is even higher peak. Now you can see here 5th December RSI was 84, second successive peak on 21st January on price. In this zone, RSI highest point is 74. So from 84 to 74, there was first negative divergence. If you are in good profit or you don't want to take more risk, you could have come out here itself. But if you continued, there's a new peak in price, and you have to observe this zone now. Okay, if it starts to come down, RSI is lower than previous one. If it starts to come down from here itself, that means you have a second negative divergence. But if it continues to rise, then there is no problem. Okay, so this is the negative divergence. One peak, second peak, third peak, price rising higher, peaks rising for price. RSI, one peak, second peak, third peak, and peaks are coming down. So pictorially, if you have to see, okay, what we can do, just to make you understand this pictorially as well, let me show you. Okay, here how I can draw this. So if I join the peaks of the price, it should look like a rising line, correct? This is a rising line. Okay, and if I join the peaks of the RSI, corresponding peaks of the RSI, it should look like a falling line. This is theoretically is the negative divergence. So peaks are rising for price, whereas for RSI peaks are dropping. Or you can say in stochastic also if there is, but in this case stochastic is not really confirming it. Even the histogram, actually you see it's not constantly falling, it is rising up, down. So in this case you don't have actually a confirmation from other oscillators, whereas in case of Apollo Hospital we had confirmation from all the oscillators. Let's see Apollo Hospital ones in this diagram. Apollo Hospital. hold on, let it open. I'm trying to get the Apollo Hospital chart here to show you the diagram. Okay, this is Apollo Hospital. Now if you see the peaks, I'm sorry, it was Tata Global. I have taken the wrong chart. Sorry for this. Let's me go to Tata Global. Okay, all right, go back. No. All right, okay, so we have it here. So now if I join the peaks from here to second to third, right, is the rising peak in the price. If I see the RSI corresponding peaks, they are falling one, correct? And not only in RSI, you see even in stochastic it looks the same, falling one. And if you see in the histogram also, you have higher histogram here, then lower, and then third one is even lower, right? So this is called negative divergence, and let me assure you, this is the best way to come out of your short-term trade. Okay, that is why I'm calling it the preferred way, because it is giving you leading indication of a potential reversal of the uptrend, and it is asking you to come out in a civilized way with a good amount of profit, because it gives you signal right at the top of the chart, right? Okay, now if you can club this, you can also club this with the other way. You can also club this with your resistance identification. You can club these first and two together. Okay, if you get good into doing these two things together, that's even better, right? So if you know that price resistance is going to come at this level in the chart, and when the price reaches that level, then you start to see negative divergence. Combination you can respect the most, right? If you can do that, you'll always book right amount of profit in the uptrends. Okay, so try to practice this as much as you can, right? It's going to be very, very useful for your short-term trades. Okay, so and then you will start enjoying the profit. You will start feeling more confident riding the journeys. Otherwise, you know, I know most of the traders they know the entry point, but they don't know how to come out. So they are always scared. Even when the stock is going in their favor, they are still scared. Oh my God, will I lose the profit? Shall I come out? And most of one of the simplest, I mean, one of the most common problems traders have is that they don't book right amount of profit. They always come out early. Okay, or they see big profits, but they end up coming later when the stock has come down significantly. Okay, so use this negative divergence, practice it as much as possible. I know it takes time to start identifying this easily, but once you have practiced it for a few months, you can become good into identification of that, and then you will become good in booking right amount of profit. All right, so that is about the booking right amount of profit at right time. Use these methods, use negative divergence, club it with resistance identification also if you can, and that will give you the best result. Okay, so that is all for today. Hope you have learned something very useful again today, right? Just like in previous case. So I hope you can use this in your short-term trades and enjoy right amount of profit. We publish our stock selections based on our trading methods in our monthly journal, right? So if you are interested to know what this monthly journal contains, or you want to subscribe for it, you can always contact me. Okay, looking forward to talk about something new next time. Okay, till then, goodbye. Wish you great time in the market. Enjoy your trading. Okay, to get informed on new videos, it is best to subscribe to our YouTube channel. Our YouTube channel, I think you know already, it's called Mavhi Investor. All right, so till then, once again, thank you and have a great time.